Hello and welcome to Banking Transformed, the top podcast in retail banking. I'm your host, Jim Maroos, owner and CEO of the Digital Banking Report and co-publisher of the Financial Brand. With the possibility of a recession, financial institutions of all sizes may be considering a delay or cut in technology spending. As seen by recent challenges at Southwest Airlines, falling behind in technology capabilities can create enormous costs in both the short and long term. According to Forrester, firms pursuing technology-driven innovation grow 3 to 4 times faster than industry averages. Just as importantly, new technologies can reduce the cost of doing business, improve the customer experience, and provide a long-term competitive advantage. I'm excited to have Maureen Doyle-Spare, General Manager at the digital transformation consulting firm UST, on the show today. We'll be discussing the pursuit of technology investments regardless of the economy to ensure financial institutions will be future ready. While economic downturns can be challenging for the banking industry, some of the most successful innovation and growth opportunities can often be found during times of economic uncertainty. This is because economic downturns can often coincide with reduced competition, greater access to top talent, lower cost of resources, and opportunities for strategic acquisitions. So, Maureen, before we start, can you share a little bit about yourself and the work that UST does in the banking industry?
Yeah, absolutely. First of all, thank you, Jim, for having me today. Really appreciate it. And a little bit about UST. UST is a digital transformation firm that's headquartered in Aliso Viejo in California. We have roughly 35,000 employees, obviously growing rapidly, over 30 locations, providing digital transformations for our clients. Our core ethos as a firm, which I think is very much a differentiator for us, is humanity, humility, integrity, and really transforming lives through technology. And we actually measure ourselves through the transforming lives through technology. We have about 23 years in the business. Our average relationship with clients exceeds 14 years, which is very impressive for a relatively new entrant to this space. I personally have been in the industry for over 25 years, leading consulting and solution teams, collaborating with clients, really kind of from a business lens, making sure strategic directives are kind of outlined, as well as so they align to the innovation that's being delivered, and then infusing the technology as a part of that. I'm really biased. I love the BFSI space personally. I think it's in sometimes it's a bit dragging in technology and innovation, but I also think in some ways it's constantly changing, and I think it's really interesting on how you infuse that into a highly regulated environment and still make that same significant impact.
So when you're working with financial institutions, and we're talking about technology, we're talking about digital transformation, we're talking about innovation, what's the most glaring gap between where financial institutions are today and where your firm and you believe they should be today?
Yeah, I think there's a couple of ones that I see, AI being one of them. I think governance around AI is, wherever you read anywhere, AI is in every article, every blog, everything. And I think the power of AI is incredible. I think it can make great differences into the organizations, into customer experience, as well as operational efficiencies and reducing risk. But I think where the industry hasn't put as much focus on is the implementation and governance around that. And from a UST perspective, we have a number of platforms and accelerators in this area that we work with clients on. One of them is our Expresso AI platform, where we establish the lifecycle framework in order to productionalize and test models before they go into production. We also have some accelerators which do the model debiasing the model monitoring. Obviously, with machine learning, models change. So what you put in today, as the model continues to learn, it can change. And so the firms really need to be on top of that, especially from a customer experience lens, to make sure models don't drift. And then finally, the explainability side of it. This kind of brings together the business people as well as the technologists. So, the details of a model can't be in the ivory tower of technology. The business side, the operations side need to understand what those models are doing so they can be confident that they align with their business objectives. So we have a platform called Demystify that basically does that, reads the models, put them into layman's terms. So it bridges that gap between technology and the business to bring that greater transparency around governance. So to me, while there's a lot of shiny balls out there right now, I think, as everything, the pendulum swings a little bit, and resiliency and governance, has to be then applied.
So when you look at the investment in digital technology, transformation, even fintech collaborations, do you see this changing in the near future, especially in light of what happened with Silicon Valley Bank and the concerns around higher interest rates, less VC money, things of this nature? How do you see this impacting the overall investment level by financial institutions in these key elements around digital transformation?
So I do think there's going to be an increased spend on resiliency. Those data-driven insights to identify risk patterns, anomalies, being able to highlight risks ahead of time. More focus on predictive analytics, scenarios. Putting out more scenarios, doing more testing on future scenarios, because the industry changes on a dime, and you need to have that proactive prevention. Certainly the adaptive learning side of it, putting in the best practices and the controls around past experiences and putting those into the models. So I do think there'll be continued spend and innovation around building those insights to reduce risk for firms. Additionally, I think cyber risk. Well, right now it's not top of mind. Certainly 8 months ago, 6 months ago, where we were in our cycle, cybersecurity was top of mind. It continues to be top of mind. The SEC I believe, has some new proposed regulations that have come out, or in a proposal that will require firms to have more granularity and quicker turnaround time on reporting of cybersecurity risks. So I think that resiliency aspect is going to be very, very important from a global perspective. DORA, which is a resiliency, EU resiliency, that basically looks at your technology as well as your operational, and needs to do some filings with the regulators that they have measured their operational and technology risks and partnerships adequately. So I do think there is going to be a spend. I think it's once again going to be compliance. It's going to be risk. It's how can we leverage all this digital technology, but the same resiliency and risk around it.
So the basis of this conversation, this podcast, was the concern around maybe a reduced level of investment because of the economic uncertainty. Do you see financial institutions being more tentative, or do you see some organizations actually doubling down on technology investments and innovation?
So I see it a little bit of both. I think it depends on the firm. There absolutely has been, to some extent, a slowdown. I don't think projects are being shelved. I think they're kind of slowing down to some extent. I think there are still some very strategic programs of work when it comes to customer experience that people are definitely focusing on. So I do think it goes across the board. I think from a talent acquisition perspective, I've seen more changes on how firms are handling that, where they actually are looking for partners and not doing direct hires. in order to do that. I
Right.
also see them looking at options with gig talent. UST has a program called Open Talent, and that what it does is we're able to work with our clients and bring on that gig talent, which is basically that short-term, very specialized talent that is needed. And so I think that is something that firms are looking to do is not hire. And when they do, it's very strategic hiring. It is so they have very strategic programs of work that are continuing, and they are looking for some very differentiated talent and hiring. But the mass hiring and the mass investments we saw 6, 8 months ago, a year ago,
Right.
definitely has slowed down, but it hasn't stopped. There is continued innovation, but it is strategic. It's definitely more thoughtful for sure.
It's interesting to say that because I was at an event this past week, and a lot of the talk was that instead of the big core transformation ideas, the big buys, organizations are really focusing on trying to get speed and scale through partnerships and collaborations. And as you said, those strategic components, those I need to fix this right now in the next 3 months, as opposed to we need to transform the entire core over the next couple of years. It's
Yep.
short term, it's immediate impact, it's very, as you said, strategically focused. But I think it's probably stronger because it opens up the door for the entire industry. It doesn't matter what size your firm is. When you talk about partnering and collaboration, you really have a lot more opportunities out there to grow and to change at speed and scale. When you look at the topic of new uses of data and technology, and you look at, let's say, metaverse and blockchain and chat GPT, what do you see as the future there? And in what time frame do you see these maybe having an impact on the financial services industry?
Yeah, no, it obviously great question. But because all of these at one point in time have been the shiny ball. I've been long enough in this industry to, some shiny balls take off, some shiny balls, find their use cases. Obviously blockchain has been around for a while. I absolutely believe there are continued use cases in that. Firms have been working on that now for a number of years very successfully. And it does bring that efficiency, but it is a very high cost. Going back to what you said, getting these quick hits, quick wins, to continue to realize the benefits of their strategic initiatives. That one I think takes investment, takes time. I see a lot of firms, the new Chat GPT, I think it's actually incredibly powerful. I think the client assisted client capabilities that it has, that from servicing and working with clients on loan originations, onboarding, fraud detection. But once again, I'm going to jump on the bandwagon of explainability. So, you have to put the governance around Chat GPT. You just kind of can't put it out there. I think Chat GPT, metaverse is certainly, I think that's going to be a cultural change for banks. I think it's going to be a cultural change for the average, individual who banks,
Yeah.
getting used to the universe, the metaverse. But I do think actually ChatGPT and metaverse bring an interesting combination together. I do think the ChatGPT can really, bring that more realistic conversational to the metaverse and to the avatar. I think in certain situations when you get into, the banks that do a lot of kiosks, and cafes and virtual, I think those type of culture banks, I think could really advance on the Chat GPT and metaverse. I think ChatGPT from assisting the banking customer, I think it can be really used successfully. I do think metaverse is going to take time for the bank itself to embrace it, as well as the average saver to go in and use either in their home or in a banking location to actually kind of use that metaverse.
Yeah, it's going to be interesting because I think we're seeing, financial institutions are not the leaders, so they're not the breakthroughs in most cases. But I think ChatGPT, as you mentioned, from a content development perspective, from an informational transformation perspective, it's going to be very powerful and probably implemented rather quickly, because those are lower risk situations. So again, you have to worry about biases. You have to worry about all kinds of other elements. And, behind the scenes, it really explodes the whole element of cybersecurity. Because as good as ChatGPT can do, it can also replicate me. And my voice, my look, everything about me. And so it elevates the good and the bad. And when we're looking at digital transformation, we're looking at innovation, we're looking at digital technology overall, a lot of focus is put on the end result, the customer experience, the top of glass experience. What do you see when you're working with financial institutions as to the friction that's created by back office not keeping up? I mean, we talk often on this podcast about the fact that, the front office and the front experience is only going to be as strong as your back office support is going to be. What is the challenge with financial institutions that you work with in getting to completely rethink some of that back office transformation?
Yeah, it's funny you say that. I've been in this industry for a very long time, and you're absolutely right. When I talk to clients, their digitization they've still not embraced it. For a variety of reasons. Sometimes depending on the function, it's very high touch. They don't trust automation. A lot of it is a fragmented ecosystem with a lot of best in class products that are not integrated, a common data framework to use. So I don't think in many cases in certain functions of the bank that they've fully embraced digitization yet. I think,
as you said, for various reasons. It could be job security. It could be not understanding things. And we talked about it before we went live, is that just change itself is tough. Anybody listening to the podcast or see me present recently knows that, I talk about the financial institution that buys a plug and play strategic solution. And then when the collaborating third party partner comes in, they go, well, I like everything you said. I want you still to hit your goal, but we don't want to let go of X process or procedure. You go, well, you can't get there without changing that. Yeah. And a lot of it has to do with know your customer regulations and the perception of what is needed from a know your customer. There are a lot of digital ways to take care of know your customer outside of a driver's license. In fact, significantly better than the driver's license. However, most financial institutions still start with that as the first step, or make current customers still fill out all the information as if they are not even known by the financial institution. And this is unacceptable from a consumer standpoint that knows the banking industry can do better. But holding on to so many of the legacy processes because of the lack of ability to envision what the possibilities are, even when you partner with a firm that has done it elsewhere. I remember selling in the not so far past, and people go, well, it's not the same here, or we're different than other organizations. You go, I'm sorry, right now, I'm seeing this looking back as the traditional excuses. You have a list of 7 or 6, whatever number it is, excuses you're going to use in every case to not do things differently. However, you still envision a future that says, we're going to make it easy on the customer. We're going to make it easy. We're going to reduce friction. You go, those are not equal. You can't do one without the other.
Yep. I actually completely agree with you. You know, very much in the large banks. You know, smaller banks a little different. Larger banks, every division is their own company. Sometimes it's so
Their own
siloed.
fiefdom. Yes.
You use the term better than me.
Better for me to say it than you probably also. But
Exactly, you got it.
and the challenge is, I've said it before in this podcast. The challenge is these people have never had a bad year. The reality is,
No.
could it have been better? Yeah, probably. But we're not talking about an industry that doesn't make money year after year after year. Different levels of it. But when you have those kinds of successes and you have, legacy leadership that now has 20, 30 years under their belt, they're on the tail side of this. And, they're going, I may not want to do these things as much as I say I do in the public.
Yep. Yep. No, I completely agree with you. And, it's funny, onboarding, fragmented onboarding, not digitized, not self-service, the KYC, it's been around for years and still, and there's a lot of really good technology out there. You know that, I know that. UST has a great smart ops, which is our intelligent automation that does a lot of that natural language processing, taking, documents in, verifying, etc. Um, it's cultural.
It is. And yeah,
Do they accept and trust technology? And that's that's basic blocking and tackling, the automation aspect of it. When you bring AI into it, people even get more concerned. So going back to the beginning of what I said is, at the beginning of all this is the governance.
yeah.
Bringing that explainability, because until you bring that explainability, that will build the trust
Yeah.
between the operations and the technology side of the house.
It's top down and it's communication. I mean, I know some firms that do an extraordinarily good job of communicating to employees their desire to have them embrace what's coming up from a digital perspective and how it can help them, as opposed to put them at risk. But we have a whole lot of this going around that says, I don't want to be put out of a job, so I'll put invisible roadblocks in the way until I get told otherwise. And, I look back and you can remember the days of the signature card. We always thought as an industry, those were required, when really signature cards weren't required. It was just the requirement to know your customer. Somebody only has to go to the Apple Card to realize that there's better and more technologically advanced and safer ways of doing know your customer than traditional methods. So, I'm going to pivot a little bit here. And it's clearer than ever that we have an increased need for experience and talent that really understands digital transformation and future technologies. How do you envision this war for talent playing out? And does this need for talent open the door for new third-party and fintech collaborations? And you touched upon a little bit earlier, where you don't necessarily have to buy the talent or acquire all this talent for everything, but you partner with those firms that do it and maybe go up a scale with regard to having talent that can manage the outside resources.
Yeah, so it's an interesting topic. And, a year ago, the talent wars are different than they are right now.
Definitely.
It has eased up a little bit, but there is very significant demand. We have a very significant demand, but it's, once again, very differentiated skills. So and people are partnering. The larger banks, hiring is, not as quick and fast as it was before. They're not getting a lot of approvals to hire, but as you aptly put, they're still proceeding with their projects. They still have their KPIs. They still have to hit it. So they are looking for partners. And that's where, UST, with our innovation and our experience and our capabilities and accelerators, we have done that a lot with our clients. Another area that I see is low code, no code.
Yes.
So there's a lot of interest, and I see that for a couple of reasons. One, talent is part of it. The other is speed to market. The other is it can kind of get more into the business side of it. We partner with Microsoft for the Power Apps as well as OutSystems. We recently was a strategic partner with Mendex, AWS, and UST with a focus on modernization as their partner in that area. But an interesting thing that UST has, in addition to the gig talent, we have a program called Step It Up. Going back to the beginning when I said our ethos was humanity, humility, and integrity, and that we actually do measure transforming lives, we have a program called Step It Up that's been in existence for about 10, 12 years. And basically, we work with our clients to identify diversity, talent, and depending on how they define diversity, we upskill those. So they're non STEM people. We upskill them. UST invests in that. The client does not. So that is our contribution to transforming lives. We train them. It can be up to 6, 7 months. We've done hundreds of these programs for a lot of our BFSI clients. We've brought in skilled people from Java to cybersecurity analysts. We were doing, as I like to say, we were doing this before anybody was looking. Before it was on trend, I kind of laughed with my husband. I said, 25 years later, being a woman in tech is finally on trend.
Right. Yeah.
But we do this. It's from a military program. It's women. It's people of color. We have done this. We've done this successfully. We've done it for a lot of firms. We're landing cybersecurity analysts. Our clients then have the opportunity to hire them. So it de-risks for our clients the integration, the training, bringing people into the workforce that normally wouldn't be in the STEM workforce. So we have done this. We think it's a huge differentiator. Our clients have come back, and it brings new people into tech. And actually makes a firm actually, diversity is never a bad thing. Diversity of thought, diversity of people. And it's one of what I think foundational things of who UST is from a firm level.
So, Maureen, there continues to be a lot of talk around digital transformation in banking, yet, based on our research at least, the pace of this transformation differs immensely from organization to organization. To be prepared for the future, where do organizations have to make big bets today?
I think the big bets that they need to play is definitely they need to get their infrastructure into the cloud. Getting their infrastructure into the cloud and their data management, a more unified data management strategy, I think is important. Because going back to what you said on the back office, how the back office operates affects your customer experience. And until things are able to integrate, there's normalization of data across the large banks, for KYC and onboarding. That really is, the foundational aspects certainly need to be done. Cybersecurity, we absolutely have to look at that. And then finally, I do think AI, the power of AI is not to be dismissed. I think it can help front, middle, and back office, from client experience to processing, loan applications and ChatGPT. And so I think, to me, understanding how you can infuse AI into your overall business and create the impact you want, I think is one of the big bets that firms have to take a hard look at.
It's interesting too, because we've used AI for years in the risk and security areas. And I think if organizations implement AI solutions within, let's say, a column, a silo of the bank. Maybe it's loan processing, maybe it's new account opening, whatever it is. That's a good way to get your feet wet. And because of the fact that there's so many ways now to modify and modernize the core without having to do the whole thing at once,
Mm-hmm.
I think it's a great way to dip your toes in the water but jump in fast type scenario. So
Mm-hmm.
when, do you see a bias? You work with a lot of different organizations of different sizes. Do you see a bias as to how the organizational structure of financial institutions should be changed to place the right emphasis on technology and data and innovation? And maybe the answer is not, a black and white solution. Maybe it is based on the organization. But how do you see this done in the industry? Because we're really moving quickly. And I think, at least in my observations, organizations are challenged as to how should they restructure for the modern world. Is there any one answer? Are there certain biases that you may have that say, this is what I would probably do?
Yeah, I think I've seen the most success when firms really adopt the agile mindset. I've seen a lot of banks be agile-ish, but really not bought into being agile. I think agile brings the agile philosophy really brings IT and the business together. And in the large banks, that's where the magic happens when you can bring IT and business together and be able to foster innovation, do quick hits, fail fast, and part of agile is
I'm laughing only because the banking world doesn't like the fail fast, only because they don't want to have any risk, so they don't want to fail ever, which is a real mindset change that needs to take place.
Exactly, which is why I'm saying the agile, from beginning to end, not just from and I'm not just talking about it from a delivering technology framework. I'm talking about it a complete mindset. And when you're able to really kind of get that complete mindset, it really does bridge the business and the technology partners. And so you behave differently. You look at things differently. And because you're taking things in small bits, and moving things along, that you can do that fail fast and rapidly pivot, rather than planning out a large program of work, putting lots of resources, and getting 3/4 of the way through and realizing maybe it isn't working as planned. So I do think firms that embrace agile tend to be more successful. But it is a cultural shift. It is not just a technology approach shift. It is a cultural shift.
So, Maureen, you talked about being agile and having more involvement across the organization to be able to fail fast. I'm going to move that a little bit towards democratization of data, insights, and modern technology so that more people in the organization can embrace what's available, as opposed to simply having it be in the realm of one silo within an organization. Do you see more organizations going towards this structure of saying, we want more people to have the power to leverage the insights, the data, the technologies that we have within our organization?
I do. I think aspirationally, absolutely. I think everybody agrees, to really give the personalization and the value-added services. You need that holistic view of the customer. You need to understand. You need to also pull in the non-structured external information, as well as what's the firm has, in order to really understand the customer's behaviors, the customer's preferences, and really pull that together as a single holistic unit. So I think firms understand that in order to be competitive, they absolutely need to do that. I think it comes to their data management and how willing they are to change their data management. And do they have the resources? Do they have the tools to, really enhance and make that accessibility to the data. A lot of the data sometimes, is on-prem applications and not hosted in the cloud, so it's not accessible to the greater banking institution. So we've worked with a lot of clients, doing that modernization, moving the data to the cloud, we partner with a platform called Next Pathway that actually helps. We work alongside it, and we are able to quickly move not the data, but the harder part of it is to move all that ETL that's built around that data. So if they are moving to the cloud, all that ETL doesn't have to be rebuilt. So we work closely with our partners and our clients to kind of try to bring our expertise and our accelerators to help them achieve that. But I think philosophically, most of the banks agree, yes, they need to do it. Yes, they need to get all this unstructured external alternative data sources. To some extent, you could consider within a large bank the, other divisions, external data sources. Well, they shouldn't be, but sometimes you can see that. But I think it is having it in the cloud and then having that, data management across divisions in the bank, which is going to be, go back to what I said at the beginning, it's foundational. It's foundational.
Yeah.
And that foundational lift has to be done to support the transformation.
So as we wrap up this conversation, what do you think is the biggest challenge facing the banking industry today?
I do think the biggest challenge is resiliency governance. I think, everybody needs to keep up with the customer experience. I think everybody is aware of that. I think as technology changes, I think as customer behaviors change, I think there's going to be, increased focus and expenditure on putting, improved controls and potentially regulation demands. So I think that is one area that I think you'll find banks spending more and more time to make sure that they mitigate that.
And the alternative, what's the biggest opportunity for the industry, do you believe?
I think the biggest opportunity for the industry, is changing how they do business.
It may be a challenge also. I'll give you a pass on that because it's one of those things you go, it's the biggest opportunity, but it's the hardest thing for them to do. Yeah.
It is. And adopting new ways of doing business and, and I think you said it at the beginning and I fully agree with you. With each, instability in the market and uncertainty, it brings opportunities. It makes us look at how we do things differently. It forces us how to do things differently. So I think the biggest thing that we can look at as opportunity is, this instability is making a lot of firms figure out how they become more efficient. If the economy was, humming along like it was 2 years ago, would people be looking at optimization as closely as they are today if we weren't having some of the cybersecurity challenges that we've had over the last 18 months in the world? Would we have leaned into resiliency and cybersecurity? So I think, we look at what's going on and it does change what we do as an organization. And everybody is looking at optimization right now.
It's interesting. I am becoming more and more of a believer that size doesn't matter. I'm seeing some amazing things being done by some of the smallest organizations I would have ever considered to be in the realm of innovation, digital transformation, all this. But I think between the mindset differences between the smaller and the larger organizations, the ability to buy at scale strategic solutions in pockets to fix what's broken in a prioritization order, as opposed to saying we got to fix it all at once. And I think the mindsets, I'm excited about what I'm seeing in the small and mid-sized community banks and community credit unions, because they really have a focus on getting things done without getting caught up into their legacy mindset. And that's exciting for me because it opens the door to a lot of opportunities, especially at times of this strange world we're in. People said, okay, people are transferring money from community banks to the biggest 5 banks. Well, I think money flows the other way just as easily as organizations say, geez, how much money do I want to put in with X, Y, and Z? And the focus on the community becomes greater. So, Maureen, thank you so much for being on the show today. I really appreciate your time.
Thank you very much. I appreciate your time and thoroughly enjoyed the discussion.
Thanks for listening to Banking Transform, winner of 3 international awards for podcast excellence. If you enjoy what we're doing, please take 30 to 45 seconds to show some love in the form of a positive review. It helps us continue to get great guests. Finally, be sure to catch the recent articles on the financial brand and check out the research we're doing at the Digital Banking Report. This has been a production of Evergreen Podcast. A special thank you to our senior producer, Leah Hassage, audio engineer Sean Rowe-Hoffman, and video producer Will Pritz. I'm your host, Jim Roos. Until next time, remember, the best preparation for tomorrow is investing in what is important today.